And then in other developments, economists have highlighted that South Africa will experience at least 3 more years of low revenue growth. That's as the country grapples with costly structural fixes in the economy. Business reporter Ntokozo Khumalo caught up with Nedbank economist Matshego at a budget preview roundtable earlier today and has more on this matter.
South Africans are anxiously waiting to hear from Finance Minister Ntokozo Khumalo next week when he tables the budget. And with South Africa having struggled to up its revenue over the last decade, questions are, how will the country fill that budget deficit? And I am now with Nedbank economist Matshego for a little bit more detail around that. Thank you so much for talking to us. You gave us your insights on what Nedbank forecasts will come out of the budget. Low revenue, high expenditure, a low tax base. What can we expect?
Well, unfortunately, it's going to be another difficult budget. The revenue numbers not looking pretty. We've already seen from the numbers released up to December that revenue growth is actually very, very limited, around 0.2%. And on the expenditure side, we've seen growth of close to 8%. So on the revenue side, we expect the minister to announce a shortfall or revenue miss of around 55 billion for the current fiscal year. And with the higher expenditure, it simply means that the budget shortfall or so-called deficit is going to be higher than 5%.
How will we fill that deficit?
Well, we heard on November 1 last year that National Treasury intends to raise about 15 billion rand from new taxes, or maybe the adjustment rather of the current taxes, but I believe it's going to be a bit difficult for National Treasury to raise taxes in this environment. We saw it happening in the mid-2000s from around 2015 to 2018 with the higher tax rates not necessarily generating higher revenue.
And the bond market, how attractive is the South African bond market currently to raise some of that revenue?
Well, attractiveness would be looking at the policies and all that. So I would say that our economic policies are still reasonably attractive to help us, draw in those monies. But how are we looking compared to other emerging markets? Unfortunately, we're not looking too pretty, and as a result of that, we're seeing foreign investors sort of go into other jurisdictions before they come to South Africa.
Looking into the next 2 to 3 years post-2024, what can Treasury do to ensure that we find the balance in our books and get the economy growing?
Yeah, just from the side of government finances, National Treasury has to ensure that it borrows less and less every year, because the moment it borrows more and more, the interest payments on existing debt are going up. Those debt service costs are eating into the revenue, which is already struggling. And all the other pressures, such as, the Eskom debt package, and now Transnet also in need of help. And we don't know about the other state-owned enterprises. So the Minister and National Treasury have to basically keep many balls in the air and strike a good balance between the need to support the local economy, but also keep government finances sustainable.
Isaac, thank you so much for those insights. For Newzroom Afrika, I'm Ntokozo Khumalo in Johannesburg.